I apologize. Thanks for letting me know, Bluebird. Hopefully, you guys can hear the audio now. Hey, Lorna, good to see you. Perfect. Thank you. Appreciate that. So, getting back started over here, SPX overall bounced up this morning. We're attempting a bullish divergent bar here on the hourly chart. If that can print within the next 27 minutes at 10:30, then there's a good possibility that we might one follow through with a higher high and two potentially continue to go to the upside. Yeah, John, not a problem. Appreciate y'all letting me know. The caution I have personally about taking this signal much higher, right? So it might be good for a scalp trade, maybe a credit spread, a put credit spread because we're doing a really good job of holding 4,300. The caution I have here, hey Jill, good to see you, is the 43.25 level. Now, normally on an intraday perspective, that's a mini psychological level. Anything that ends in a 25-point increment, especially on something like SPX, can give us that slight stall there, right? It's what the hedge funds play further out. That's usually the strike increment when you go way out in time and look at things on the S&P and on other symbols. But the second issue around this range is one, we did get very close to it on Friday and immediately stalled, right? We had a strong bounce and gap up at the open, immediately bounced up into that range. And then in the next hour, we gave it all back and then some. So it's definitely a price level to be aware of. But part of the reason why it's a price level is because it's right by the August highs that we had last year. And as some of you may or may not remember, last year, whenever we ran up in August, had that beautiful run to the upside, we stalled right here. And then that's where we gave it up and actually went back down to make new lows for the year. Now, I'm not saying that's what's going to happen this time by any means. We've done a really good job of slowly working our way back into a bullish trend here. We are right now starting to break weekly resistance, which was at 42.60. So all of this is certainly trying to lean more towards a bullish aspect, but it is, of course, another level to be mindful of because of that. And so what I would be anticipating a bit more of this week is if we can't really start to break above that level by Wednesday, I'd be inclined to think that it holds. And with it holding, more than likely we could find ourselves in chop, basically going into Wednesday. Now, tomorrow we do have CPI. Last year, CPI was a big mover, right? We could go back to the daily chart and I can point out days where I know specifically, like this day here back on October 13th, this was a CPI day, right? So there are days where you can specifically go back and point it out and say, I know that was CPI, right? CPI had really strong volatile days from an intraday perspective, as well as stronger volatile moves that happened after the announcement. But this year, CPI has been a non event, right? We haven't really seen much of a follow through off CPI. Maybe a little bit of a daily range compared to what we've seen recently, right? We're back in what I would argue is a more normal daily range for the market compared to what we saw with the 100-point ranges last year. Um, but it's not as big of a market mover from what we've seen this year. Now, there's always the possibility, of course, that tomorrow is the catalyst, right? And it does become a big market mover again. But I wouldn't put money on that, right? Last year, we were able in the Profit Recycling Mastery to put on trades where we played the volatility, we played the news, and the majority of the time, those trades worked out beautifully last year for that and Fed. But this year, especially on CPI being right before the Fed, I wouldn't put as much weight on that. The real weight is going to come in on Wednesday. And even then, the question's going to be is Powell, right? Is the Fed going to say anything that really changes the narrative of what's already priced into this market? And right now, what's already priced in is we're not anticipating any more rate hikes, right? We think that that's going to start curving down, or it has last session. We think, if anything, there's more than likely going to be a pause. And then there has been some pricing in on Fed futures where they're looking for potential rate cuts later in the year. Now, last Fed day, that wasn't talked about, right? It certainly didn't seem like that was necessarily on the table. But the pause is. And I think a lot of people are looking for that right now, especially what happened with some of the smaller banks like Silicon Valley Bank and things like that. It's kind of putting the pressure on the Fed to look at doing a pause or maybe even doing a cut. But on the flip side, of course, we know inflation is still high. We know that from that perspective, the rate hikes would make more sense. And so pausing kind of seems to be the middle ground there, where you're not really going back into cuts, but you're also not continuing to do hikes that could put pressure on some of these smaller banks. And I that hard. So I'm not really anticipating this to be a big mover. Now, it might be from an intraday perspective. Like I've said, the Fed has still allowed for some decent daily ranges. So for my intraday traders out there, certainly, gear up for Wednesday. That should be a fun day to trade. But outside of the intraday move, I really wouldn't anticipate it being a strong trend move. And what I mean by that is last year, for example, we could go back, we could point out a Fed day like here, for example, and not only was it a strong move, but the day of, right? But the move continued with a trend move, right? We had follow through off of not only what Powell had said, but follow through in general with the overall trend of the market after the announcement, right? Digesting that news, if you will. But this year, we've had some strong days off of Fed like here. But as you can see, the overall trend for a good chunk of this year has been chop. We've either just been playing from one level into the next, or we've been stuck in consolidation. And a weekly chart really gives a better picture of this. Prior to the bounce up that we've had recently and the break of weekly resistance, it was a case of where we were holding 3,800 as a strong price support level, right? That's the lows of this year, is right around that range. That's been price support. And then 4,200 was acting as price resistance. And part of that was because of the weekly resistance levels. We had the 100 period simple acting as weekly resistance. We have the ATR trailing stop above that acting as resistance. And of course, 4,200 is a very big psychological level. You know that with all the zeros that it ends in. And so all of that combined was putting pressure on the price, and it had a really hard time breaking back above that level. But we've finally been able to do that, right? The weekly squeeze is attempting to fire this week. We'll see whether or not that remains valid into Friday. We still have a very nice bullish signal in the compound breakout tool. We have bullish momentum with room to move higher. And that's important, right? That shows that the strength of the squeeze trying to fire to the upside, there is room for this bullish trend to continue. And then, of course, recently, a couple weeks ago, we broke our 100 period simple and the ATR trailing stop, turning that into support. And now we are attempting to continue to hold that strength. So going into the Fed announcement, I think it might be a bit choppy, might be, you pick and choose an individual symbol that seems to be doing its own thing. But from a market perspective, I would not be too surprised if we can kind of anticipate more of a choppier range going into that announcement. Maybe we'll get a break of 43.25, but I'm not holding my breath necessarily for that. And then once the Fed comes out with their statement, followed by, of course, with the press conference, and that's the bigger key there is him talking to reporters and answering questions. That's usually when you get more of the volatility and then the trend move into the close. That trend move, if it ends up being positive, meaning the market has a positive reaction to what he says, it likes what Powell and the Fed are doing, then I think that's a good catalyst to break us above 43.25 and keep us going towards 4,400 and towards the bullish trend overall. If instead, though, the market does not like what the Fed says, right? Which we've seen that before. Let's say they surprise everyone and do a rate hike, for example, when everybody's pricing in more of it being a non event, then that could be the catalyst that holds this price level that we're talking about. And at the very least, brings us back down towards 4,200 to then re engage that level as a potential support. And of course, if it can't hold support, then we might see a stronger drop off. Now, once again, not really anticipating that from what we've seen this year. Like I said, we haven't really had the stronger follow-throughs off the Fed announcements for bigger trend moves. Um, but that I think is going to be the bigger catalyst for this week. So that being said, we do hold one trade in the challenge, which is GE. And the strike level I chose for the re-entry might have been just a little bit high because theta decay is not going in our favor right now. But nothing about this chart pattern is necessarily wrong, right? Everything's maintaining itself. The question is, though, with this trade, do we want to hold it through the Fed news, right? With that possibility that the Fed is a positive market reaction and really keeps us going to the upside? Or is it better to protect capital here if we're concerned about a pullback? And you should really look at doing this with any short dated trade that you're in, especially if it's this week's expiration. Understand the Fed could complete it might not do anything to the narrative, but it might also completely change the narrative. And so the question you always want to ask yourself is, are you okay losing the risk that you have out there? Right? Which I know kind of sounds like a Debbie Downer to ask, but it's a really good one to ask because in that way you come across it from a better mindset, right? You won't get emotional about the trade if it does turn against you because you already thought of that being a possibility when you were evaluating your trade to first manage it at the start of the week. So for myself in the GE trade, I'm okay holding the risk out there. And until it really starts to break the chart pattern, I'm inclined to in it. As you can see, even with the slight pullback we've had today, um, did follow through with the bullish divergent bar on Friday, barely, right? By probably a couple pennies. Let's see, the high Friday was 106.55. The high today was 106.59, right? So it barely followed through with the higher high, stalling, technically is pulling back and in the red for the day. But you can see it's still above the 10 period simple. It's still overall in a bullish trend. Today, we actually have bullish momentum working back in our favor with a green bar above the zero line. And of course, when we zoom out, we can see we have plenty of room to play this to the upside. We still have a valid bullish signal on the compound breakout tool. And then we do still have a squeeze setting up here on the low compression squeeze that's still valid. So the squeeze hasn't yet fired. So all of this right now is still pointing to the only issue that we've had with GE is we've really had a price level around this 105, 106 range that we've struggled to break above. That's you can see it's kind of been choppy. But the good news is we haven't broken past our first line of resistance, right? That first, or excuse me, line of support, right? The first line in the sand, if you will, of the 10 period simple. So that's still holding up well. And as long as that continues to hold, I'm inclined to stay through this trade. So for myself, I will likely hold this trade through the announcement. That way, if the market does have a positive reaction and it really starts to bounce higher, that could also be the catalyst for names like GE, which are kind of struggling between bouncing and getting going, to then fire to the upside and benefit us in our favor. As for new trade entries, for example, shop in the small account mentorship, we took a quick profit on this morning. Certainly could have held on, it looks like, for a bit better of a profit, but that's okay. I certainly would not mind looking at this for a re-entry, but part of the reason I wanted to take the quick win was because shop was technically a this week expiration for me. And so I don't know, given the price level that you can see here around 63.75, really up to 65, right? That's kind of been the price resistance that we've seen shop stall at. I don't know if I want to put that risk on for this week because if, let's say, the market does get a little bit of a pullback from Powell and it causes things like shop to pull back as well, the theta decay on any out of the money strike is going to be eaten alive by this week's expiration. So instead, I still very much like this chart setup, but what I'd like to look to do is now that we've taken a quick win, is re-engage it a little bit further out in time, maybe give ourselves a different strike level to consider. And then that way, if we have to sit through a pullback this week, we have a little bit more flexibility of doing so while still playing the bullish trend. And for those of you who aren't aware of shop, happy to walk through it here real quickly. The things I like about this chart is the 1 hour squeeze is just starting to fire today, or it's attempting to fire. It keeps flashing on and off this morning. But we do have that trying to go in our favor. So we have the low compression squeeze here starting to fire. Momentum's trying to build up from the 0 line. So if that can keep going, that's going to turn into a more bullish signal. Bollinger Bands, of course, are in. The 10 is attempting to cross above the 30. So all of this is trying to go back into a more bullish formation. And of course, with momentum being where it's at, we have plenty of room to the upside to keep going from an intraday perspective. From a 4-hour chart, we also have a squeeze, which last I checked was still valid. So for those of you who aren't aware, the squeeze indicator basically helps give you a higher probability of a bigger than anticipated move. And so here is another squeeze that we've been printing during this chop. You can see we're starting to get green momentum today above the 0 line, still pretty flat. So is the compound breakout tool. This is a choppy signal. So that's part of the reason why I still want to be mindful around 65 as the top end of this range. That's, another reason why I took the quick win is because we start to get up towards this 63, 65 level, right? And if we start to stall there, that could be a sign that price resistance is holding. We could get a stronger pullback. If we do get a stronger pullback, that just gives us a better entry as long as support holds to re-engage in the trade. But we do still have the 4-hour squeeze working in our favor. And certainly if the news is positive this week, right, that could help be the catalyst for us really breaking above 65 and continuing higher. And then, of course, the daily chart looks great because not only do we have the squeeze, we have the bullish signal in the compound breakout tool. We have rising momentum with room to the upside to really keep going. That was a great reset towards the 0 line, which I'll show you here in a second. So momentum had a great reset from exhaustion and is starting to build back up, never crossed below the 0 line. So that's a good sign for the bulls. We have a bullish signal back here on the compound breakout tool. We have the squeeze. We have recent true lows, which I like seeing. Bollinger Bands are attempting to open up today. So if that can remain valid into the close, that's going to look good overall. The only hurdle is price resistance, right? So if we can start to break above price resistance, which once again may not happen until Wednesday after the news, but if we can start to break that level, all of these squeezes starting to fire to the upside looks good for us, right? We already have the 1-hour attempting to fire. If that fires, that could then in turn trigger the 4-hour squeeze to start to fire. If the 4-hour squeeze starts to fire, that could trigger the daily squeeze to start to fire and really keep this going. Now, I do have a target to the upside. The first target I have is weekly resistance because we do want to be mindful. Shop, even though it has been trying to go back into a bullish trend this year, and certainly currently, right, looks great to try and get a bullish bounce up. Last year really wreaked some havoc for this symbol. And so we are still trading below the 100-period simple from a weekly perspective. And with that being the case, that is the next target I have to the upside. That's 7207. And so if anything, from a weekly perspective, it looks like we're trying to go into a wedge pattern, right? We have the 10-period simple doing a really good job of holding support, but then we have this pressure of the 100-period simple. Now, we could certainly go up and test it, might even get a chance to break above it like we've done with SPX on the weekly. But until then, that is the first target of the upside. So 70, maybe just slightly below that level to 72 is currently where I'd play this move up into. And if it looks like it's stalling at all, no issue taking the quick win, just like I did this morning, right? We can always look to re-enter the trade. The question I typically ask myself whenever I'm debating about taking a profit is, would I be more upset about taking the profit here and it keeps going, which is actually what has happened to me today, right? I took the quick win right before jumping on, and then shop has continued to the upside. So am I more upset that the price kept going and I could have had a bigger profit? Or would I have been more upset if I didn't take the win that I saw this morning and it reversed back down on me to where that winner turns back into a loser? And for me, the answer is very simple. I would have definitely been more upset about seeing that profit this morning and not taking the nice profit on a Monday morning and seeing that reverse back down on me. So you can always look at the re-entry for a trade. Certainly keep that in mind, guys. Every now and then the question, when I ask myself that question, sometimes I get the opposite answer, but in this case, more than happy taking the quick win. If I can get a pullback entry, certainly I'd prefer that. But even if this keeps going to the upside, I wouldn't mind re-engaging in this just pushing out the expiration maybe a week or 2, giving ourselves a little bit more time, to continue to try and play this run higher overall. So, for things that are setting up like this, personally, unless the risk reward just really makes sense for this week, I will likely be looking at least out to next week, if not further, to build myself a little bit of cushion around that Fed news. Otherwise, if I'm doing any sort of overnight trade, ideally I'm either 100% okay with the capital risk to hold through the Fed announcement on Wednesday, or I'm looking to scalp the quick win for an overnight move, recycle the capital back into the account so that I can stay a little bit flat through the announcement. Because overall, like I said, I think the market is trying to go back into that bullish trend. It's really, certainly giving it a good shot at attempting to. But we need to be mindful of the August highs. We need to be mindful that we've already had a great run to the upside. So a pullback certainly wouldn't be out of the question for it to reset itself before the next leg higher. And we, of course, know that if the Fed surprises the market in any way, like doing another rate hike or talking about not doing any cuts and maybe doing hikes later in the year or anything like that that comes out during the conference call, that in turn could fluctuate the market in a little bit more of a dramatic way. Now, like I said, I'm not anticipating that. I think them pausing, that's already priced into the market, and I think that's still the path that they're likely to go on as of right now. But we always know that anything can happen around these announcements. So being mindful of your capital risk going into them, really understanding what kind of risk you have out there for your account through news events like this, especially shorter dated risk, is always a good plan to have going into a week like this. And then once the Fed news occurs, once we do digest that news and get a better idea of how the market's moving, then certainly on Thursday and Friday, we can really look to re-engage into some like next week trades, right, that are shorter term or engage into some swing trades if things are really looking like they're pushing higher, and going about it from there. So does anyone have any questions around that game plan or any questions at all around the stock market or what to anticipate with Fed this week? I'm more than happy to answer it. I have just a couple minutes left for our Monday market update. So I'll give you a second to type out something in case you do. For those of you over in the small account mentorship, this is our first Monday market update together, but I usually do these every Monday at 10 from 10 to 10:30. So as long as it doesn't step on Cody's schedule whatsoever, you can anticipate these on a regular occurrence each morning. Yeah, not a problem, Alan, of course. I don't see any questions coming through. So, just as a reminder, to the day of Fed, um, in case you're not with me trading on Wednesday, it is not uncommon to identify a range early on in the market to start chopping in. Usually that happens at or before Europe's close, even where we start to identify that range a little bit earlier in the market and we start to just consolidate in that range. Then, once the initial news comes out of whether or not they're doing a hike or not, which is at 1 p.m. Central, we usually get a spike in volatility from an intraday perspective. It's not uncommon to see that spike in volatility go both ways, both up and down. And then sometimes we'll pause for a second, or those volatile moves may continue, but it's kind of in a muted range. Certainly bigger than what we saw in the morning, but still muted because at 1:30 when the press conference starts, that's where the volatility starts to really pick back up again. That's where the algos start to get going. And then usually from there, as he starts to answer questions, once again, it's not uncommon to see him move in both ways. But typically, and what we've seen last year, and certainly we've still seen it this year from a daily perspective, is the market will start to choose a direction to trend in. So sometimes it will trend to the upside into the close, sometimes it will trend to the downside. It really does make for a great end of day trade potentially. So I will certainly be keeping a look out for an SPX end of day pin on Wednesday to see if we can't take advantage of that. And then, outside of that, if we can really keep the trend move going into Thursday, that would be great. But I wouldn't hold my breath for that just because that's not what we've really seen this year. Usually we have the volatility the day of, and then it kind of goes right back into its normal routine on Thursday and following through with that. So just a reminder, this the second reminder I want to give you guys about Fed Day is it's not uncommon for it on SPX in particular, right, in the indexes, but it's also not uncommon on individual symbols to see the premium kind of stay within strikes. So if you're really looking at something like a credit spread, unless you get the move to work in your favor, don't be too surprised if the premiums really hold up well in that trade, because that Fed announcement is almost like an earnings announcement for the market, right? Where the option premiums can sometimes even increase into the news. And then once the news happens, once the market has an idea about the reaction, then all those out of the money strikes will get wiped out by theta decay, and that option premium will come back down into a normal level for the market. So just be cautious of your capital risk, especially if you're playing Wednesday with long calls and long puts. Understand how that premium can sometimes really benefit in your favor, right? If the spike happens in your favor and all of a sudden that out of the money strike goes in the money. But if it doesn't work in your favor, or your strike is too far out of the money and the underlying price never gets to it, understand that theta decay will wipe out that premium after, sometimes after 1 o'clock, but certainly after 1:30 whenever he starts talking. So that is my time for today, guys. Thank you so much for joining me. As always, may the trade be with you, my fellow Jedis, and I look forward to